Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. This is part of our education series on, in this particular case, on how to day trade the indexes. So what we're going to do is we're going to look at trades that we made directly off of our live trading desk today. So ARMR insiders, subscribers, get to kind of drill down into our website here, and under exclusive video coverage, part of that exclusive coverage is to participate in the live trading desk. And this is an example of our day trading screens on the big indexes. So what I'm going to do right now is I'm going to share with you how we use options information overlaid on top of the ARMR algorithm that we call the Price Movement Profiler, or the ARMR PMP. It's our algo that helps us day trade. And when we get confluence at a certain price, and then ARMR day trading triggers, we can get long or short, or in this case, we buy calls or puts on the indexes. And so in our live trading session in the morning, I'm sharing this screen you're going to see, and I'm talking you all through how we put these trades on. So let's, I'm going to hop in there and take a look at it. I want to say a couple of things before I do. Number one, this is my own personal experience. I'm sharing with you information I use in my own portfolio. So you all have to decide if it's the right risk tolerance for your account. You have to make your own decisions on how to manage your own assets. I think we all know that. But over time, I think this education process might help you with your own trading, how to use options information and how to use an algorithmic trigger system. Ours, of course, is the ARMR Report system. And if you happen to have an interest in being a part of that, you can always subscribe right down here to the ARMR Report. You know, certainly this YouTube channel you could subscribe to as well, so you could see other education videos we do as we go forward. Don't forget, if you enjoy this, give me a thumbs up and a like. I appreciate it. It helps out a lot. So I think that's the setup. Without further ado, let's get into how we were trading today on our trading desk, the indexes. So right now what you're looking at, I'm going to share with you a little secret of a trade I have on right now, and I'll do that at the end of this video. I'm going to share with you what I'm doing right now on the indexes. But what you're looking at here, we're going to take the S&P first. So all of these chart patterns are 3-minute bar charts. That's step number one. We use 3-minute bar charts, and keep that secret, okay? Because most people don't use 3 minutes. People like 5 minutes, 1 minute, 10 minutes, 15 minutes. We've found our best success trading on 3-minute charts. Okay, and I say keep it secret because when everyone starts using 3 minutes, we'll have to change and start using something else. Excuse me. So blue bars obviously are up bars, red bars are down bars. All of the lines other than the purple dash, all of those lines are the ARMR algorithm, the ARMR PMP. The purple dashes are gamma information, right? Options gamma information. So let's blow this screen up to make it easier for you to see it, okay? So what you're looking at here, this yellow line coming through right here is the ARMR moving average. It's a moving average that is very effective for us when it comes to trading. This orange line down here is 3 standard deviations below that moving average, and there's another line 4 standard deviations above it that we also use. But for today's purposes, the purple dashes and the black dots are what we're really going to focus on. Now, the ARMR PMP is based on VWAP trading and mean reversion. So the volume weighted average price is incredibly important if you're going to day trade. If you're not using a VWAP, you're literally trading blind. It's like you're bringing a knife to a gunfight, okay? So I'm going to show you why right here. All right, so each day, this is 3 days on you're looking at. This is 2 days ago, this is yesterday, this is today, with this line right here being the line of demarcation between days, okay? So what we saw this morning was an open and a sell-off below these 2 purple dash lines, which are key options levels, okay? You'll also see this teal line right here, okay? This light blue line is the average true range low of the prior day. Now, it's an ARMR average true range. It's an ARMR average true range. Everything we use here, VWAP, average true range, standard deviations, Fibonacci extensions. They're all ARMR. What that means is we've taken off-the-shelf indicators and infused them with a volatility component that makes them more effective in our humble opinion. Okay, so the market broke below the key gamma level and the prior day's average true range low. So on the trading desk today, I was sharing with ARMR insiders, we don't mind a break below this key level. The question is what happens at 10:30 and 11:30. Now, please write this down. I think you're going to find this effective. It'll help you trade. The volume weighted average price is very important. If you don't know what I'm talking about, go do research and start incorporating that immediately into your trading. But the second most important algorithmic trade that goes on, the biggest of size, is a time weighted average price, a TWAP. And so you'll find on the hour and on the half hour, and every now and then on the quarter hour, there will be very important moments in the market. Okay. So when the market's selling off hard this morning, maybe some of the positions in the portfolio are getting near stops. Our recommendation is you do not take a position out in the first half hour of trading. And you really try not to sell anything, even if it's going below a stop, until after 10:30 and particularly 11:30. 11:30 is the key. So the ARMR investing way is a three-stage process. One, we build our whiteboard. That's fundamental research. Two, we use ARMR algorithms, and Algos help us execute when to get long, when to get short, when to risk on, risk off. And the third piece, of course, are stop-loss disciplines. The stop-loss discipline, however, is not as simple as it hits the price and you get out. So I'm going to share with you one piece of the ARMR puzzle that we use that really works. We let the price go below a stop in the first hour of trading. It might be painful, it might be hard to watch, but statistically speaking, the asset will shake out in the first 2 hours. And if it closes above your stop by the end of the day, you should not be out of the position. So what we do is we try to stay in a position till 10:30. We watch how it trades between 10:30 and 11:30. Once the 11:30 price is in and we see the low of the first 2 hours, our stop will be the low of the first 2 hours. Okay. So what we have here is a breakdown. And we told everybody on the desk, don't worry about this breakdown. We're going to have to get through this. 10:30 will be the first turning point. You can see right here, the market turns and the ARMR algo paints this bar yellow, telling us the market's going to go higher. It did. It challenged the options location and the VWAP. Now, right here, we actually bought puts on the S&P as we went back below the VWAP and back below the key location. So we don't short first thing in the morning. We don't buy puts first thing in the morning because the probability of success on those trades is dramatically less than the probability of success here. So we stay out. It craters, rallies. It can't get above this level. So we buy puts on the index here. It breaks down to this level and we literally sold all of our puts right here on that turn. All right, we're sharing this information live on the desk. We just captured that profit and we had a 3-bar reversal. As you can see, again, it's printed yellow with a finishing black bar that tells us there's been three, in candlestick charting, that's 3 white soldiers is one way to look at it. And it's a major reversal pattern. And we literally said right here on this bar, that second yellow bar, I shared this information with everyone on the desk. As we went above that VWAP and the options location, at that moment, if all I was doing was day trading, I would have 50% of my portfolio long SPY call options and 50% long QQQ call options. I'll show you why in a minute in the Qs. Okay. Now, I'm not telling you what to do. I'm not telling anybody on the desk you have to do this. I'm just sharing the importance, okay, of that double bottom using the ARMR algorithm which this 3-bar reversal ending right here, the second yellow bar, closing above the VWAP, above prior day's average true range low, and above the gamma level was the location to get long the market. And it absolutely screamed right back to the ARMR moving average. So a lot of what we do on this desk is mean reversion. And when you get far away from that moving average, you look for reasons to get long back to the moving average. When you get far above that moving average, you look for reasons to get buy puts for a mean reversion back to the moving average. All right, that's what VWAP trading is all about. Okay, so we had a short trade. Well, not short. We were long the puts here for a 15-minute profit, turned around and recommended getting the calls right here. And of course, you know, half an hour later, the thing it was a huge screamer. Okay. Now, I am in another put trade. And the reason is we have a double top right at the ARMR moving average that went below the ARMR moving average right here. Okay. And so what I'm going to do now while we're talking is I'm going to book that profit. Okay. While we're talking, I'm going to book this profit. And the reason is I'm not looking for a huge gain on that trade. I just wanted to make a little bit more money today. Okay. I think when we get a double bottom like this between 10:30 and 11:30, and the 11:30 close is back above all the key locations, statistically speaking, the market closes higher. That's not a guarantee. Market, who knows? The Biden administration could say some other ridiculous socialist thing and the whole market could implode again, right? What am I referring to? I'm talking about comments that intellectual property is no longer sacrosanct in this country, okay? But I digress. Let's don't get off on that. Let's stay on trading. So obviously there could always be a reversal. But statistically speaking, when we get a double bottom between 10:30 and 11:30 that looks like this above key gamma levels and above VWAPs, we should trade higher all day. This double top at the ARMR moving average made putting a put position on a no-brainer for me. And the trade back down here, which is the average true range high of the day, is what I was looking for. I thought it would come back down, touch here. It could come all the way down to the VWAP. It's possible. But I'm just going to skin the cat again and make a little bit of money there. Okay? So that's how we traded. This is 3 trades today now on the S&P. Puts right here, booked a profit. Calls right here, screamer. Okay? And then puts again, booked a profit. Okay? 3 ways to trade today using the ARMR PMP and gamma location. Now, I'm just going to share with you real quick. We could do the same thing, and we did on the NASDAQ. Okay? The situation's not as easy on the NASDAQ. You can see the difference. The ARMR moving average is way up here. Okay? So this S&P is a lot easier to trade. It always is. Okay? NASDAQ's a little bit more difficult, but of course the volatility could be bigger. You could have bigger days. But look at the location again. Now, in this case, notice the difference though, okay? In this case, the triple Qs were below the gamma location. We traded the stock anyway. We bought the calls anyway. We bought the puts anyway, because it was an almost perfect replica of what was going on in the S&P. Okay? The S&P did it around key levels, so that was really easy. But look at the chart patterns. They're almost identical. And so we put the same trades on the triple Qs. And in this case, it runs right back up to the key gamma level, which equals the ARMR average true range high of the day. So that trade's over now, right? Profit booked right up there. So in conclusion, you can use gamma locations. You can use our trigger if you'd like, and you could certainly subscribe right down here. Don't forget, you can always take a look at the ARMR reports right down there. You can click on it, take a peek, see if it fits what you're trying to learn and what you're trying to do. Okay? But you can also have your own trigger. Use gamma location over your trigger and use volume weighted average pricing and time weighted average pricing information to put your trades on. Now, I know some guys like to do E-minis, some guys like to do futures, options on futures. You can do whatever you want. On the ARMR trading desk, the live trading desk that I'm sharing with subscribers every morning, I share the information and I share how I trade. You do whatever you want, right? I mean, sometimes if I'm getting long the market, it means, hey, man, it's open season to get long your favorite stock, depending on what the stock is and if it's aligned with the market. So that's up to you. I hope you found this helpful. I'm going to be doing these education videos periodically so you guys can learn the process. If you have any questions for me, comments right down here in this YouTube video, and I will be happy to answer questions. And if there's something specific you want me to go over, just leave that comment down here and I'll do another education video specifically about that issue. I hope you guys have a great trading day today. Be safe out there, and always remember, before you hit that button to buy something or sell it, put yourself on the right side of probabilities over and over again when reward is worth the risk. And execute that strategy. Don't manage your P&L, manage your positions, and the P&L will follow. All right? Take care, guys. I'll see you next time.